Good now, revolutionaries, and welcome to the Rise Up Morning Show. Today is Tuesday, May 27th. A happy belated Memorial Day to those who observe it. Thank you to those who served. And to everybody else who's not in the United States, wherever you are, whenever you listen, whether it's live on Facebook or LinkedIn, or you're listening in the future, hello and welcome. We hope your candles are green, and we are here to share helpful news, commentary, answers to your crypto questions. I'm Evan, he's Alex, he's Will. If you want to see our faces, you can catch the recording on YouTube, and we've got a lot more links for you at theriseupmorningshow.com. But enough of that already. I'm back, man. It feels so good to be back with you guys.
It's so good to have you back, man. It's been such a long time since the three of us have all been together on the show. I mean, we were together for a little bit in Toronto, but you know, it's been so long since we've been able to do the show together. It's been almost a month. I mean, it was 3 weeks, 3 full weeks of us not together like this.
Mm-hmm. Wow. Oh my gosh. Okay. Well, a lot has happened in the time that I've been gone. You guys may have talked about this already. What the heck? You may have talked about this already. But you know what I really missed and why I really wanted to come on the show more than any other thing, even maybe more than hanging out with you guys, was to play the bumper that Keith made us to celebrate the fact that we have got a Bitcoin all-time high. I'm a little late, but
I forgot he made this.
All of us just need to transport ourselves back like a week in time.
Right. Okay, so I know we're not
days.
quite, there anymore. The sound of happiness, the sound of highs. But we're doing okay. And I just want people to feel the peace that I have when, I don't know, I've got friends like you that can hang on to the show, that can keep up with crypto. I know that if Bitcoin absolutely tanked, you guys would send me a text message or tell me about it or something like that. But I don't have to pay so much attention to it. The only time I miss it is when I don't get to do a new all-time high sound. So thanks for letting me do it. And thank you, Keith, for the wonderful sounds for the show. We absolutely love it. We've had a lot of news since I've been gone. And you asked, Will, how I was visiting my family. It's been really wonderful to spend time grieving my grandpa, hanging out with my people. We had a big sale where we sold a bunch of his stuff to people who were gonna use it, which is awesome. And then we got to park my grandma's car in the garage at her house for the first time in the 45 years that she's lived there. So that was really cool.
She just hasn't had there needs to be more context there. Why is that a bit?
My grandpa built this garage at their house in order not to park their cars, but to fit
their junk,
all
everything
of their
else.
Yeah.
And it is to some eyes maybe junky, but I swear to you, if you, there's not a better place in the world to have been if your leg just turned green and fell off. My grandpa could find a way to put it back on, and probably 5 or 6 ways to put it back on, and had most of the stuff he needed right there. Everything from surgical tools to welding materials to cauterizing guns. It was a wild place.
He was ready for it.
He was ready for it. He was a prepared kind of guy, and so it was really cool to see some of his stuff go to folks who would put it to good use. But I am so far behind, guys. I don't know what you've talked about, and a lot has happened.
I mean, neither do we. So, you're the same. It's par, man. You guys, maybe Alex, you're better than me. I just go, cool, that week's over. And then you just flush that down the toilet and go, fresh week. What else do we got?
The burden of remembering all of this dumb shit that happens in this industry.
Well, and it happens so quick. I mean, okay, so I know, for example, that we've had 2 offers to buy Circle. I know that we've had a huge hack of Cetus. I know that the Genius... Not a hack? Okay.
Not a hack.
So, I need the TLDR there. I also know that the Genius Act is probably going to pass, but that there might be a ban on interest-bearing stablecoins in the United States, which I'm excited to talk to our guest about. But, I don't know. What did I really, really miss? I saw that what's his name is the tiny guy from Turkey is launching his own meme coin.
No.
The tiny
No.
guy from Turkey.
He's
You know what I'm
launching
talking
he's launching his like 4th meme coin.
Oh, he's got another one?
No,
And another one?
he's been grifting people in crypto for almost 5 years. He is an unmitigated piece of shit. We're talking about Hezbollah.
That's right. That's right.
The itty
Not to be
bitty
confused with
pint-sized
Hezbollah.
grifter.
Okay, I was like, wait, we're talking about Hezbollah? I was like, wait, what?
Right, right.
Not Hezbollah.
Not the group, the guy.
Yeah.
You know, he's like half a guy. Anyway, so there's a lot of that happening. And then we were talking a little yesterday. A lot of folks in the comments lately have been asking, have you bought Zebec? Have you bought Zebec? Zebec's so cool. Check it out. What's going on with Zebec? And side note, if you are paying attention to the crypto token known as ZBCN, then it's a kind of a red time for you at this particular moment. I hope you're taking profits. So we've got a lot of different stuff that we can talk about. We've got William Quigley, co-founder of Tether and WAX, coming at the top of the hour. And I'd just love to know where you guys might like to take it. We did have a question in the comments directed at you, Will, that was asking about if you could shed some light on what was happening with SWE. And you told me it was not a hack. So maybe
Correct.
that's a great place to start because it sounds like it was important.
Well, first of all, I was paying attention to this because literally 12 hours before the hack, I was like, oh, this looks like an interesting position to take for a trade in SWE.
Oh, no.
So, you know, deployed a casual $200,000 hack. The hack happens. I'm just like, well, of course it has.
Yeah.
But like, from a TA standpoint, to me, it looks like SWE is about to bounce. But anyway, so this is what happened. So Cetus, if you guys don't know, is the decentralized exchange over on SWE. It was the #1 decentralized exchange. Memory serves me right. Either way, it's 1 or 2. It's a big one.
Yeah,
it's like the one. And so what happened is it wasn't a hack, but there was an exploit in the code. Basically, if there was like an ancient city defense, right, and you have the wall around the city, it's like there was a hatch that some shepherd or something used to go in and out of the city that was left unlocked, right? So, and it was just, or like there was just a hole there in the wall, and someone was able to go in and exploit that and take out $200 million worth of 15 different assets. None of them were SWE directly, but and a lot of that, some of that was swapped into SWE. About $50 million of that $220 million was swapped into SWE. And then another thing that was interesting was that the hacker bridged to Ethereum, had a bunch of things on Ethereum. And so what has happened is a lot of what that hackers tried to do, exploiter, it has been frozen. So one of the things that SWE was able to do was work with all the validators to freeze and deny transactions from that wallet address. So now a bunch of people are like, oh, so SWE is not decentralized. And it's like, yeah, like, of course it wasn't. Like, it's fast. It's fast quickly out the gate. It's not going to be super decentralized. You know, and that's, I feel like people are now throwing a big stink about SWE in that sense, being like, it's not decentralized, so blah, 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 blah. I'm like, no one cares about decentralization anymore, my personal opinion. They just want it to be fast and cheap. Those are the biggest things that care. So I don't think it really matters from a PR standpoint. It does matter from a security standpoint and all that. But anyway, that's neither here nor there. I just wanted to give you an extra little nugget of something to look into, Evan. And so anyway, what happened is a lot of the assets that the exploiter took can't really do anything with if it's still in the SWE network and wasn't bridged over to Ethereum, because the SWE validators are turning off transactions from them. But for the most part, they had $50 million of SWE, and then they had like $25 million of USDT, and then some other assets over in Ethereum as well. So that's what happened. Not a hack, but an exploit via this little hole in the code, or a little bug in the code. And SWE also put out a statement where they are putting an extra $10 million to the side for security for like bug bounty programs and a number of other things. So SWE handled this about as well as they could. Not a hack. Does shine a light on the fact that SWE is not really decentralized. If they want to freeze your wallet, they can. So some interesting bits of things came to light.
Yeah, very interesting. When companies or crypto ecosystems get exploited, the way that they choose to respond, it's interesting because we've had a couple of these kind of prominent exploits or hacks or whatever you want to call them. I honestly didn't know there was a technical difference in the words, so it's something I need to clean up in my own language. But I know, for example, after the Coinbase compromise, that they turned around last week and said, instead of paying the $20 million that these folks are demanding we ransom, we will give anybody with information about this hack $20 million. And they've had an investigation. I see there is an ongoing investigation here. It's like it's an interesting time to be somebody who is trying to find a bug or an exploit in a crypto protocol. And I would be willing to bet that that probably won't change for a while.
Yeah. Nope.
Moist Mike said in the comments, Will, I took the same trade. So sorry about it, Mike. Sorry about it.
It's gonna be okay, Mike. Don't worry, man. We'll be fine.
You know, it'll bounce. I saw also that our friend Tom said, I have long-term conviction in SWI. I think it might have been Nil who said that too, made a video talking about it or something similar. Maybe it was a comment that I saw. But things go up, things come down, and what I like to see is just a strong response from people. So often businesses don't have good responses to when there's a legitimate organizational crisis. But I think if you tell them what you're going to do, you promise to take some action, you take some action, and you fix the problem most of the time, people will forget about it because crypto moves so darn fast. We did have a follow-up question, though, and I'd like to drill into this, Will, about your thoughts about centralization and decentralization. Eddie says, is it not better for someone to look over it, meaning the protocol, and help things to run better? And I'm curious, I just want to add to their question to say, you say decentralization, it doesn't matter too much. People care if it's fast, if it's cheap. I've seen comments like that on everything from crypto to the TikTok debate. I don't care who owns it. I just want to use TikTok. Can you elaborate on that more? Because we talk about it sometimes on the show, but I'd love to know how you feel. Decentralization, not a big deal.
So when I say it's not a big deal, I'm talking from a price appreciation standpoint or an interest from a user standpoint to actually go and use the thing. And the reason why is if you're looking at the trilemma problem, which for those of you who don't know what that means at all, it's a big problem in the crypto space, the crypto development space of how do I have decentralization? How do I have speed? How do I have cheap fees, right? How do I have these three things? And you typically can't get all three. You either have to go closer towards two and away from one, right? It's like trying to find a position on the chart in a triangle, right? You're gonna at some point either have to be right in the middle, and you're not gonna be very fast, you're not gonna be very cheap, you're not gonna be very decentralized, or go towards one versus the other, depending on what you need to have happen, right? That's the trilemma problem. It's a developer issue. And the thing is that as a user, though, a user does not feel decentralization or centralization. They feel speed, they feel fees. So from a adoption standpoint, decentralization doesn't matter at all. From a longevity standpoint, decentralization is potentially the most important thing. But from a user standpoint, an adoption standpoint, it's not felt at all by people getting on chain and using that product. So that's why I say it's not that important from an adoption standpoint, and it's not that important from a bad PR standpoint. So people pointing out, SWI is not decentralized. You're going to have the OG, people in the space being like, oh my God, it's not decentralized, my God. But then you're going to have the 95% of people who are now in the space who aren't a part of that OG crowd who are going to go, okay, I don't care. It's fast, it's cheap. That's like the thing that matters. And so the bad PR of SWI not being decentralized is going to be ignored. In my opinion.
Fair deal. Alex, you've been kind of quiet.
I saw you. I thought I saw you might want to jump in a few times.
I think that you're correct, Will, if you're talking about people who exist in the user pool that doesn't care about what the point of all of this stuff is, but is only here to use it to make themselves some more money, which is fine. That's most people in crypto right now, but decentralization is quite literally the only thing that matters for the people that this tech is purporting to actually serve and help. So in that sense, it is disappointing because, there are way more people than are currently using this stuff all over the world who would love a decentralized access to, or a decentralized money system of some sort, because their whole problem is that money grubbing warlords and governments steal their money and take it away from them.
Mm-hmm.
And in that sense, then yeah, of course it matters, because a company can be pressured.
Yes.
So I would agree, but I think that the fact that that is the case just shows you how far away we truly are from any kind of real meaningful adoption. What we have are use cases amongst a tiny batch of people trying to, hyper technify their day trading, or just like make money in a society that doesn't necessarily have to care about decentralization.
Yeah. Well, you have theory and what is best for society, and then you have what people gravitate towards. And what people gravitate towards is incentive. And so it depends on what your incentive is. Usually that incentive is, I'm trying to get more money, or whatever money is to you, right? Depending on your situation, the incentive is, I need to get out of this place. I need to, evacuate with my family. I need to be in something outside of the entire system. But for most of society, it's, I want to get more money. And that isn't necessarily aligned with the theory of what the true intention was designed via decentralization, right? With everything that you mentioned before. And that's not always aligned. And so you have this tug between what the technology is really actually designed for, which is to break out of the system, right? And also the desire for people to have and get more. And that is like the philosophical argument kind of that we're both alluding to, which is always fun.
Yeah, it just depends where you are and who you are and what you're trying to do. I mean, there's a big difference between like, ooh, let me try to invest in this thing because it might go up. In that sense, yeah, decentralization doesn't matter at all. It's totally a buzzword, and they're all lying about it anyway. But then on the other hand, there's like, oh wait, you're telling me that my local currency, which is the only one that I have access to, is currently inflating at a rate of 700%. But I could store it in a stablecoin instead on a network that I don't have to worry about my government being able to take away from me because it's sitting on this cold wallet or whatever. Great, cool. Because I get that comment all the time. I get that DM all the time. Like, how do I store my money in something like this? How do I get it out of this currency and into this? How do I on-ramp from this currency I've never heard of into USDC? Can I do that? What do I do with it? How do I get Bitcoin with it or whatever? And like for those people, it's a totally different scenario. And the only thing that matters is decentralization.
Mm-hmm. You gave me a great idea to make a funny video, by the way. I won't spoil it on the live, but I'll make it later today. It's going to be perfect.
We're looking forward to seeing your funny video. And since we're talking about systemic changes, and I'm curious to know, so let me set the table for our guests. We're going to have William Quigley on a little bit later. William is the co-founder of Tether. He's the co-founder of WAX. He is a long time looking at changing systems as a capitalist, disrupting them by putting some money into somebody who's going to build something new and different. And right now, it's one of the most disruptive moments in history in terms of like technology and policy are coming together. Alex, you've said it before that the speed of crypto is about to meet the attention span. What is it? The attention span of Congress is about to meet the speed of. I don't know. You know where I'm going with this. Everybody who listens knows.
Something about the I think he was talking about
Guys,
like.
It's not even a hard quote.
This is a.
I think there was like the oak tree is like the nuts.
By the chestnuts.
It's like if you put it in wet
And
soil,
the same
and that's
river.
the crypto.
That's right.
And then when it blossoms, that's the Congress, and then the beaver chops it down, and that's Jerome Powell with interest rates. That's what Alex said.
Okay. I said all that to say that I saw your comments with Neil, Alex, talking about, this is the way the system kind of has always been. And now in this conversation that we're having about like, yeah, we're trying to break out of this system. We're trying to build new, better incentives. We're trying to build different viable models for like how people can have enough. And I am kind of curious to know what you guys think about some of the stuff that folks are building right now. So we can go to the stablecoin bill because Neil says, excuse me, because we're talking about Neil also said, but we can process payroll on chain, in regard to saying like what's actually going to change people's lives and what's just going to give somebody a little carrot while somebody else is holding the stick. So that's something I want to talk about a little bit, but I also do want to talk about some of the hot things of the moment. Somebody asked us here, Poor2 Beast, what's your take on syrup? Somebody else asked us again about Zebec. So maybe this is a good time to talk about that, and then we can zoom out and talk about what are we really doing here kind of thing. I see you looking, though, at your computer screen, and I'm curious, are you chitting and chatting?
I was just pulling up the stablecoin bill status for you. So if you wanted to...
Yeah.
Let's go into that.
I think that's a good place to go, and then we can ask William about it. I want to lay the context for people. Alex, do you want to give a quick intro since you've got it pulled up, or you want me to take it?
Yeah, so, well, I was just going to talk about where the bill's at.
Please.
Because it's still
It's been quite a journey, though.
It's been a journey, and it's still got a minute. So there are lots of different stages. Even if you break down, from one house to the next house, back to the first house, back to the second house, to the president to sign, there's a lot of bullshit that goes on in the middle. So it's passed the Senate procedural vote. That's the big vote that it did pass. And it was a pretty decent amount of support that was relatively bipartisan. Voted with 66-32. And it's currently on the Senate floor for amendments. So the procedural vote adopts it officially, and then changes can happen. And then after all of that stuff gets finished and confirmed, which is likely after this recess here that they're finishing, House committee process is already done, and it'll go on to the full House vote, reconciliation if needed, and then it gets signed. So it still has several stages to go through from a procedural standpoint.
And the interesting thing that I see happening now is this question about yield. I was listening to Unchained yesterday, and they were talking about how there was a pretty stark line on the agreement or disagreement about whether or not stablecoins per the legislation would be able to bear yield for people who held them. And it was like a lot of younger Congress people were like, yeah, of course they can. And a lot of older Congress people were like, no, we got to take that out of the bill. And side note, funny caveat.
That's all you need to know.
Well, the funny caveat is that the average age of the people who voted to keep interest was like 55. And the average age of the people who voted, no, we got to take it out, was like 68.
Why?
But Laura Shin referred to it as the younger and the older. And I was like, wait a second.
Well, from congressional standpoint, 55 is a kindergartner.
It's a baby.
It's a baby.
And the guest that they had was saying, here's what's probably going to happen. So if they say that U.S.-based stablecoins can't be interest-bearing for people in the U.S., then what are consumers going to do? They're probably going to go to other stablecoins that can bear interest for them. Or they're just going to go to other instruments entirely. Like the beneficiaries of something like this would mostly be the big banks that would be disrupted by the stablecoin model. And I thought that was really interesting because I don't know if I would want a stablecoin act if stablecoins were so crippled. On one hand, stablecoins are mostly used by people to get access to dollars in places where they are hard to come by. But on the other hand, if you're the United States government, we talked about this on the show before, and you want to advance the hegemony of the dollar, you want as many people in your country also to want to hold it, to use it as a tool to get more dollars, to prop up the value of your country as an idea. So I just was curious if you guys are as concerned about that as me.
So I think you are just on that last point. I don't think it's the United States being like, yeah, we want U.S. citizens to hold USDC. I don't think that's the desire. It's not, because U.S. citizens already hold as many dollars as they possibly can, right? Because we use the dollar. What they want is they go, oh, there's this decentralized international market that uses stable coins pegged to the dollar. Let's expand that, because not everybody's using that. That's just going to get bigger. The pool of people using that's going to get bigger and bigger. Let's flood that with dollars. And then that drives demand for dollars, which means that folks like Circle have to drive demand for bond purchases, which helps us continue to spend money and irresponsibly manage our budget.
Well, see, and that costs the American taxpayers more or less. But I mean, that's the way money is. That's why I say they would want U.S. citizens to hold it, is because, you know, just generally speaking, there's money here. People are interested in having dollars here, and it's a difference between like holding my money in cash beneath my mattress and buying Circle's token that they're going to use to buy treasury bills. You know what I mean? That's what I was thinking there.
I gotcha. But
yeah, it's to answer your question. Yes, it becomes, I wouldn't say completely pointless, but it would become much more like what I would expect out of Congress to kneecap stuff that way. I'm curious to see what the pushback looks like, because one of the interest-bearing stablecoins that would be directly affected by this is USDY, which is Ondo's product. Ondo has friends with very deep pockets who have lots of influence in government, and including the head of the SEC. So as we look at this now, you know, like ever expanding web of people who have direct stake and a direct line of gain to be had from these things succeeding, it just feels unlikely to me that it will be allowed to pass, or it will be not heavily contested. That would be my guess. I am guessing, just to be clear, but this just feels like these are people who won't accept a loss, to be honest.
Yeah, that's fair. Okay, so let's bring that back when we get William on the show. I also wanted to touch on Zebec, because everybody in the comments has been asking about it. Have you guys done a deep dive on this thoroughly?
Haven't heard a single thing about it until you brought it up.
You're kidding.
Hadn't heard a single thing about it.
I wouldn't say deep dive, but I've looked up enough to have identified some things that I've never seen talked about. Red flag. This is all what happens when you look up something with objectivity in mind instead of bag holder bias.
Let me say this. I am amazed, Will, that you haven't, because I feel like I see it all over
He doesn't
TikTok.
watch TikTok.
And I don't watch TikTok.
Well, the thing is, I watch TikTok. It's just that there's nothing in my TikTok feed about cryptocurrency.
Well, then you have an interesting feed.
It's puppies, it's funny skits, it's historical memes, and then it's usually like a lot of people getting hurt in various ways. Doing stupid stuff. It's great. And
well, the first time I heard about the Zebec token was actually right before we went to consensus. Even though it's been around in one form or another, Zebec network, since I think 2021. For people who don't know, it's kind of come to prominence twice recently because it's made the rounds on social media. And they had a recent announcement about a partnership with Circle, the issuer of USDC. And they're trying to position Zebec as like a key piece of a broader financial ecosystem. Potentially, their goal is to facilitate smoother fiat to crypto transitions to enhance trust among institutional users. And there are a couple of things that, at least to like my cursory look, do kind of set Zebec apart from other things that make it interesting. It's expanded to multiple chains. It's on Ethereum, it's on BNB, it's on Base, and it provides continuous real-time payment streaming, crypto debit cards, and they're trying to build out a DPIN network. This is kind of a pivot for them. But I do think pivots are interesting. And I do think mindshare matters. They transitioned from their original ZBC token to ZBCN with a 10-to-1 split. They have attracted some significant investments. They raised over $46 million, almost $50 million from investors like Circle, Coinbase, Solana Ventures, Lightspeed. And so the question is, of course, is now a good time to buy?
It's the perfect time to buy.
Well, we'll find out. Because
I didn't say that.
You know, I have some thoughts on it, but Alex, I want to hand it to you next because I also know you have some skepticism about this too.
What's before Alex? Will you look that up? I want to look up the chart. What's the ticker of this again?
ZBCN. And zoom out to Max. I don't know if it'll say, it used to be ZBC, now it's ZBCN. It might show you the whole history, but ZBC's been around since for years.
Yeah.
Oh yeah. Yeah.
Just to be clear, though, first of all, ZBCN is a Solana token, which is kind of funny. It's launched and built on Solana. So let's just...
I didn't say that. Thank you. But they're on many chains.
Yeah. The recent thing has been, going multi-chain. Whatever the hell that means. So there's a couple issues here. And actually, there's some really interesting chatter amongst developers on Solana forums. So Reddit, for future reference, if you're looking to get really interesting information, like straight from the mouths of the horses, there are a ton of developer subreddits where people like compare code chunks and talk about like who got what from where and who's repurposed what. Shout out IC. And there is a bunch of chatter about Zebec because of some controversy wherein they just straight ripped off a significant chunk of code. And because the first thought that I had when I saw this project and their proposed purpose is anything with a smart contract can do this already. This is not like a groundbreaking piece of technology. The idea of streaming payments, I mean, shit, one of the first live streams I ever did with another person on this platform almost 5 years ago now was with my friend Sam, who's an Ethereum developer, has been working on Solidity since the beginning of Solidity. And this is exactly what he was talking about. He's like, this is one of the benefits. You could stream payments to people and it would be done like this. Any smart contract platform can do this. You just have to write a contract that pays out in those increments. There's nothing novel about it. So it should be suspicious that that is getting the hype. Like that we have discovered streaming payment possibility, revolutionizing payroll. Do you know how many crypto payroll solutions there are?
Oh my God, there's so many.
And some that are quite old.
Some that
and
are
quite good.
Old.
So does this mean that Dash is coming back?
Yes. Dash.
Wow. Blast from the past,
Blast
man.
from the past. 2017 callback, everybody. I've been here. I've been here for a little bit. Proof point.
Is it too late to get in?
Yeah, it's not a good time to buy.
Speaking of old stuff, Neo has made some rounds lately too, and
Dude,
yeah, exactly. So
people were commenting Neo. I think it was like 6 or 9 months ago. They're like, "Hey, what about Neo? What about Neo?" And I was like, "What about Neo? What? How do you know about Neo?"
Yeah, exactly. Well, this is one of those things. Like people just see an old ass crypto and they're like, "Why wouldn't this pump?" And then the rumor mill starts. And look at the pieces of this particular rumor mill. No one capitalizes better on rumor mill generated free marketing than XRP and Ripple. Nobody. And they know exactly how it works. And it works brilliantly. And they are masters at it. Of just dropping little breadcrumbs out. People put the pieces together. It creates a whole wave of new content ideas. And then they remain relevant forever in a timeless fashion. And so there's the rumor that Zebec has partnered with Ripple. It's worth noting there's not a single credible source reporting that is the case. And all of their other partnerships include groups and organizations and companies like MasterCard and Visa who have partnered with basically everybody. Because when you say partner, MasterCard and Visa say, we have a new client. And of course, they're going to sell their services to you because they make money from you. So yes, MasterCard and Visa are working with Zebec. By that, I mean, they've sold their payment services and network to Zebec to make debit cards, which you can preload with money or whatever. This is not to say that the cards don't work. This is not to say that the idea is bad. Streaming payments is cool. Having more flexibility to spend cryptocurrency, Gesundheit, in different places that accept Visa and MasterCard is good. This is all cool. The thing is that there's nothing novel about it, and it's being sold to people as if this is earth-shattering, groundbreaking, revolutionary stuff when it's been being done since 2017.
I was just about to say, but Alex, this is groundbreaking and revolutionary stuff because it wasn't exciting since 2017.
Yeah. I mean, listen, marketing works, and this token has gone on quite a tear. So if you're looking at it, also, the disclaimer here is that nothing that I'm saying right now it means in any way, shape, or form that ZBCN's not going to pump.
Yeah.
Right.
Yeah,
Here's the thing. Here's the thing.
I think 3 weeks ago was probably the perfect time to buy.
Yeah.
Here's the thing.
Thank you,
when
Captain
you have,
Hindsight.
yeah, thank you. Based on my hardcore analysis, When it was lower down, it was pretty good to buy.
I want a clip of Evan just leaning back, and for those of you who
leaning
don't
back
have the
in the
visual,
chair, drinking his coffee.
Evan just proudly proclaims that this chart that a couple weeks ago just started to pump and has recently gone up 400%. He's like, well, I think that if you would have bought it 3 weeks ago, you'd be sitting real pretty. And then he just takes a swig from his tea and sits back in his chair as if he's just offered the most profound analysis anyone's ever heard.
I just wanted to vindicate whoever it was who was in our comments it was probably 3 or 4 weeks ago. It was before consensus, and they were like, Zebec looking pretty good right now. And I was like, I just scrolled right past it. I just want that person to know, like, hey.
No,
he's seen.
Nailed it.
He or she is
We
seen.
see you. You got it.
You did
absolutely
great.
got it.
Yep. Damn, that reminded me. What was I gonna? I had something else to add on top of that.
I know you did. We were talking about payroll and the novelty of it, and the lack of novelty.
Oh yes, what I was gonna say is, even though there are coins and there's so many of them that do absolutely nothing and run on hype and they're absolute garbage, but once they get price momentum, people get so excited, and there are enough people who really believe without doing a lot of research, and then you have a coin that price-wise can live and trade for a while until the cycle's over. Yeah. And this coin has momentum right now. It's something you can and in my personal opinion, you can genuinely look at to try to make money off of if it goes down and has a solid correction on. Because as soon as it pumps a little bit, you'll have all the other bag holders above be like, it's happening again. And then, it'll blast off again.
Like a fart coin or something.
Like a fart coin. Yeah, exactly.
Yeah. I just wanted to, since we're talking about blasts from the past, I wanted to let people know here are 2 or 3 other projects you can look up. And then I want to answer this question from Tori because it's really good. If you are interested in this idea of putting money into a smart contract in order to stream payments, or if it's new to you, I just want you to understand that one of the cool things about what smart contracts can be programmed to do is anything. You can make a smart contract that facilitates the payment between 2 people the way you rely on your bank right now to facilitate that payment, to, deliver your check or to handle your direct deposit. You could hypothetically put money into a contract, digital money that doesn't physically exist, but that will be sent, allocated, reassigned to your employees every second, every day, every minute, every hour, whatever. The physical analog version of this is like, have you guys seen those cards or whatever that McDonald's uses to pay their employees every day? So like some McDonald's, maybe it's all of them, they have a payment system where you can get paid daily. That's like one of their perks is like, come work at McDonald's, get paid daily. They give you a card like this one that you can spend in most places where Visa or MasterCard or whatever are accepted. And instead of getting a paycheck every 2 weeks, you get your paid every day. But what this is going to allow, smart contracts at scale, is if you want, payments every second, or payments whenever any condition is met. Level up to the first character to level 100 in a video game gets $5,000, that kind of thing. Smart contracts, they can do it instantly, errorlessly, the way a calculator does math. And before there was Zebec, I want to know if anybody can remember Superfluid or Sablier. Sablier is the one that I really remember well. This is like so Sablier was the first company to focus on what they called real-time finance. And it was a decentralized thing. They had solutions for vesting. Like if you are the founder of a protocol and you're going to get paid in tokens according to a schedule. They had solutions for payroll and also for airdrops that relied on continuous payment streams. And they have facilitated, this is per their website, so you need to fact check this one, over 1,300,000 transactions with a total value locked of about 350 million. Lots of different use cases, including payroll. But even though they've kind of made waves in the crypto space, they're kind of like a DeFi niched away solution. This is not like Visa and MasterCard. I think if somebody like Zebec is going to outcompete somebody like Sablier that has gotten a lot of traction and adoption with, frankly, nerds, then it's going to be because they've got MasterCard, they've got Circle, they've got their money, their solution in people's pockets because they're meeting people where they are. Like, all this to say, yeah, Zebec's the new kid on the block and it's really hype right now, but if these partnerships pan out, the space is so nascent that most people don't even know this is possible. You know what I mean?
No, listen. So, okay, it's it's happening in the comments. Exactly what I knew was going to happen. No, if you attack somebody's bag in any way, shape, or form that is not just like slobbering all over it, then people get upset. And then they yell at you and pretend that what they have is objective analysis, but yet they reject the entire premise that anything could be wrong with their project. So, first of all, I'm about to talk a little bit shit about your bag of Zebec. So take a deep breath and hold my hand, and let's get through this together. Okay, so... And yes, that was meant to be a little bit condescending because this is so freaking tired, and this is one of the reasons that these projects ultimately fail. Because no one looking at that can muster out an ounce of objectivity when they talk about it. I did not say that your bag was not going to do well, okay? Marketing and branding is basically all that matters. So it doesn't matter that this technology is not advanced. It's been around for years. Even Zebec has been around for years. It didn't just launch. It's been here for years, okay? It's not new. Also, I reject that you can tell me that because Solana Ventures and Coinbase Ventures have invested in it, they invest in so much shit, and when VCs invest in stuff, especially in an industry like crypto, they expect almost all of it to fail. Okay, so they invest with a shotgun approach. You go for a ton of stuff knowing that one or two of them are probably going to pay out and you'll make your money back there. But you don't care about the longevity of it. You care about making a return for the firm and the fund and all this kind of stuff. The thing that Zebec is doing is good. I think that it should exist, and I think that there's going to be a lot of different companies that compete that do it. And I think that one of them is going to have killer marketing and branding, and they're probably going to succeed, and that could totally be Zebec. It could totally be that.
Totally.
What I hate and what pisses me off, because it's been years that we've been using these same tired talking points to sell non-fancy stuff to people who don't know any better, is holding up the classic and tired adage of crypto partnerships, okay, as if all of them are just indicative of future success. Or two, the fact that competition doesn't matter. Or the fact that, like, we can't just straight up lie to people about what stuff is. And yes, my shirt is pink. I'm glad that
For the people in podcast land.
Evan and I both chuckled at that. We were both like,
yeah, for the people in podcast land, the comment rolled through, listen here, pink shirt.
Yeah. And then Evan and I both chuckled.
Listen here, triggered man, baby.
He does have a pink shirt.
So
someone defended you, salmon.
Like I said, oh, this isn't salmon.
No, it's bubblegum pink, brother.
Fluorescent bubblegum. Yeah. No, I just like I said, I don't know why people have to be so upset about, like, not everyone has to love your bag. Okay? And I don't know if this is like your first time coming across me, but I will never slobber all over your dumbass bag of crypto that you did 5 minutes of confirmation bias laden Googling, called it a deep dive, and now all of a sudden you tout yourself as some sort of tech expert because it confirms your bias about another bag that you're holding. Like, it's so tired, and there are so many of these things, that this is one of the reasons you can't ever advance anything in this industry with this kind of mentality, because we can't just be honest about what something is. So just talk about it the way that it actually is. Represent it appropriately and authentically. That they're killing the marketing and mindshare game. They are freaking everywhere. Okay? But one of the reasons it works is because it's built on Solana. And that means that it's working well. As of right now, there's no multi-chain anything. There's just a lot of interest from people who want to make money on this thing because it's got a lot of attention and mindshare. And because the solution is very easy to understand. Like, this is a problem that deserves a solution. Zebec might do it. And I hope that it works, and I hope everyone makes a shitload of money off of it. But if your whole argument is like, this dude in the pink shirt is cranky because he missed, just fuck off. It's such a lame, tired, like, tell me you know nothing about anything without telling me you've never read anything past 2 or 3 hypey, shilly TikTok videos. It just drives me insane. So I encourage you, if you don't want to take my word for it, just put on your objectivity hat and prompt, like, Perplexity or something, and just say, like, hey, I'm interested in this as a potential investment. I want you to highlight all of the things that I should be concerned about, and please cite your sources. And it will write you a giant amount of things that will link you to all sorts of stuff from Solana developer forums who talk about where code was stolen from. Spoiler alert, I mean, I can share all these links for you if you guys want to. Just about, where the hype has come from, anything that you should be concerned about, things that you would want to know probably as an investor, because it directly impacts the thing that you're putting a lot of money into. And then please don't top blast the chart right now. Like Will said, right? Like this thing's done what, 400% or something in a pretty
from a
short...
bottom, 600%.
600%. I mean, like, it's one of those things, even sans TA, whenever something spikes like that hard, and then it kind of chills for a minute, it's likely that people who have been in for that long and have made a buttload of money on this thing, good job. I hope that you pay yourself at least a little bit. Maybe it corrects a little bit. So just, don't be the exit liquidity. But if you've caught it now on the tail end of a 600% pump, maybe watch list it and maybe see what happens with all these different venture interests and whatever. And then if you think that means a ton, I'll wrap up just by saying, please go look at the size of the portfolios that Coinbase Ventures, Solana Ventures, Binance Ventures, that all of these firms invest in. Go look at it and then go tell me how many of those projects are dead now and how, this giant amount of money that propped this thing up actually didn't really matter that much.
Mm-hmm.
A couple of comments. Oh, go ahead.
I do want to hop to something. If we can address one comment in a minute, and go for it.
Let me just by way of transition. There's really good discussion happening in the comments. No big company, Jay Heat says, will use Zebec when they can use stablecoins. Always a question we ask, why does there need to be a token? We've got Tori, who said, I don't need more links, to be honest. My computer crashed. And God, as well as McLorden, have noted that is a Polygon shirt right there. That beautiful pink shirt. And this seems like a good time to tell you that the Rise Up Morning Show is, in fact, powered by Polygon. So shout out Polygon. Shout out to our friends over there, Nil, Mark, Rudo, etc. If you want to hear our episode with Mark Boyron, the CEO of Polygon, where he talks about the ag layer, everything they've got coming up, and it's a lot. And also, we have a lot of fun together. Then just go back 2 or 3 episodes by getting the link at theriseupmorningshow.com to listen on your favorite podcasting platform. I also put out a challenge on Rise Up After Dark saying, what is it, when Jeff the Dunker, no, Lindsay and Larissa won, or somebody, maybe a previous one, that somebody who commented would be randomly selected to win a Polygon t-shirt. Nobody has commented on the podcast yet. So this is your sign. If you want a pink t-shirt like Alex, go to
Salmon, apparently.
The Rise Up Morning Show on Apple Podcasts, on Spotify. Go somewhere where a recording lives. Or if you're listening to my voice right now in the future on the recording, all you got to do, dude, is leave a comment. And you, yes, you could be wearing a Polygon pink shirt too. So, Will, you got a transition for me.
Yes. Well, first of all, I was just chuckling at Duck Metal's comment. Well played, shirt guy. Well played. No longer pink. It's now just shirt guy. It's just the debasement of color.
It is a shirt.
What I wanted to do is I wanted to show 2 interesting things that are happening on the chart. One thing has been Bitcoin's trend. The bull trend from like the bottom at 72K upwards has been really weird. And so I just want to talk about that a little bit because there's a possible trend here for us to kind of have on our radar screen. And I also want to talk about Bitcoin dominance as well, as some things might be lining up. So I'm going to share my screen real quick. If you guys don't mind, share my entire screen.
Yeah.
You know what, I mind.
And if you want to see the screen share, then the place to catch the replay is YouTube. Find the link at theriseupmorningshow.com.
Yep. Well, then, Alex, then you're not going to like this. Here we go. Screen sharing. So what we are going to be talking about is this chunk, this big move here, right, from the base at $74,000. And what I want to point your eyeballs to is you have this move up and then you have a consolidation. A move up and then a consolidation. Move up, a consolidation, right? So let me show you what I thought was interesting, because this is just kind of weird price movement in general. So in the first move, we had Bitcoin go up about $11,600. And then if you measure the top of the consolidation move up to this next step up, so we have 1, 2, 3, 4 steps up right now. Oh, wait, hang on a second. These are out of order. Yikes. Here we go. We have another $11,000 move upwards, almost exactly the same amount, just a little bit less from the top of the consolidation phase up to the next top in the second step. Then if we do it again, we have a move upwards of $7,000 in our next step. And the last step that we've been in has been a move upwards of $6,268. So again, recap, the first step up here from the bottom, 11,600. The second step, 11,100. The third step, 7,600. The fourth step, $6,268. We're noticing a trend here. The trend is leg upwards, consolidate, leg upwards, consolidate, leg upwards, consolidate, leg upwards, consolidate. But each leg upwards is becoming a little bit less, a little bit less, and a little bit less. And that less is growing a little bit more each time. Well, except for one instance. Either way, it's less. And so we are now in a consolidation area again. Bitcoin's price is moving just kind of to the side. We're creating a new like flat area, flat step area. So this next move upwards, we have some clear resistance at $114,000. Maybe that's going to be a leg upwards of only, an extra $2,000 or $3,000. This could be an interesting signal that we are losing momentum if that were to happen. It's something with each leg upwards, we're losing a little bit of momentum. So are we then going to have actually a bad summertime and finally have a corrective period? Or are we going to have this next step upwards blast through $114,000 and just continue this trend of Bitcoin goes up after a consolidation phase of anywhere between $11,000 to $6,000? Because if we get this next leg upwards and it's clearly well below the past move of $6,200, that is a clear sign each time that we are losing momentum every single time and potentially getting close to a local top. However, that idea or trend analysis goes out the window if we get a blast upwards bigger than the previous step up. But so it's just an interesting pattern that has been forming on Bitcoin's chart that also is very unnatural price movement. It's very unnatural price movement. This is not natural price movement. There's something going on. Could just be a lot of people who are just diving into Bitcoin, knowing that it's a very scarce asset and they're only going to have so much time to actually buy some for long-term storing, which is happening, and that pool of people is growing, and that could very well be this. So that's all I wanted to point out on the Bitcoin chart.
William Shrezatha says there's a trader on X called Cryptic Trades who has good rationale for this with data. Is that somebody you know? And if not?
No, but I'm going to write
Might have to take a look. Cryptic Trades _
Cryptic Trades.
Yeah.
Underscore. I'll give him a look.
Appreciate that. And appreciate that certainly does look like like an unusual pattern.
Yes.
The chart.
And I'll show one more thing as well. And this is the thing that I think people will get really excited about, because it's Bitcoin dominance. Can we get an altcoin rally here? And we are starting to get, sorry, Evan. We are starting to get some bullish or some bearish momentum on the Bitcoin dominance chart. I'll show you guys here on TikTok as well.
Thank you.
This is Bitcoin dominance on the daily time frame, and you can see this right here. We have come into resistance from this wick all the way back here, and we are starting to see a rounding over. See, we're getting this momentum, and we're starting to round over and potentially have a break in Bitcoin dominance, right? That would be very, very, very exciting for our altcoins. And at the same time, if you have a big rally in altcoins, typically that tends to line up with Bitcoin making new all-time highs and then starts to slow down, consolidate a little bit. And that consolidation and that initial dip for Bitcoin before it goes on a big correction, that's typically when your altcoins do the best. Bitcoin dominance chart seems to be lining up with that. So we could be in line for a really great fun time for altcoins if Bitcoin dominance continues to weaken. Bitcoin gets a little bit of a slingshot upwards. Maybe it's not too big of a slingshot upwards. And then it could be historically speaking, a good time to pay yourself a little bit. Just take a little bit off the table. So yeah, those are the two things I'm keeping my eyes on right now that are really exciting for like some short-term gain potentials. And then maybe having an opportunity to buy in if we get an actual correction. So again, in summary, those two things are weakness showing up on the Bitcoin dominance chart, potentially showing a likelihood for altcoins to pump, and at the same time, Bitcoin getting another leg upwards, but maybe that leg upwards is going to be a smaller, shorter step again, which would line up perfectly with the most explosive time for altcoins. So we'll see what happens.
The question always is
it too late to get in?
Yeah, is now a good time to buy? And so the answer comes,
it's the perfect time to buy.
I'm just kidding. You said we've had a couple. Nobody has set me up perfectly for this, but I just want everyone to know. I don't know how to sell this thing. You got to make sure before you buy those tokens that you actually know how to sell them. I have to say, one of the things that made me so sad about how quick our Toronto trip was and how packed it was that we did not get to make a video. I had a kimono packed for our rooftop pool with the view of the CN Tower.
It would have been so good.
It would have been so good. I was ready to see like Schmilliam Schmatzen maybe make an appearance, and I don't know what he was going to be up to, but
I don't know. But once you showed me that kimono, I was like, oh, the video could have been so good. It would have been like, when your $10 you invested in cryptos up 20%, and it would have just been like quick shots of you like in a kimono, like whipping your hair out of the pool and stuff. It would have been so good. It would have been so good.
When I was in Michigan, the last place I went to my sister's house, and she has my niece who's about to turn 2 and is just, a happy, healthy, wonderful little baby. And we took her to the pool, and I was like, oh, hell yeah. I broke out my kimono. I had my little pink glass. I had a whole outfit on to go to the pool with my niece. It was fantastic, man. Mm-hmm. I didn't get to do it at Consensus, but alas. You got to break it out sometimes. Okay, if you've got a question, a suggestion, a good joke, a word of wisdom, this is the Rise Up Morning Show, which is your place for helpful news, commentary, answers to your crypto and Web3 questions, whatever they are. Now, I do want to say, I'm watching the comments. We all watch the comments. And so if you want to know thoughts on syrup or thoughts on virtuals, I would encourage you first to check out the Rise Up Discord server. You can find the link at theriseupmorningshow.com, or just remember discord.gg/riseup. It's a great place to ask a question, get a second opinion, and find links to our past shows where we've talked about probably your favorite token, or maybe your least favorite token. And it is where the show lives 24/7, 365. We often say the only thing missing is you. And then also, I want to tell you, there's a whole thread there where people can ask for our feedback on altcoins. It's called Altcoin Grades. And on Wednesdays at 7 p.m. Central Standard Time, we go live for Rise Up After Dark. We share expert commentary from our friends who work in the industry, and we research your altcoin picks to give them a grade. Would we spend more time or money on this token? That is the best place for thoughts on the most common question we get. But right now, I do want to say, let's keep it brief, let's keep it light, because we have our friend William Quigley coming to the show to join us in just a minute. I got an email from Shirley, his admin, and shout out Shirley, because if somebody could handle me, maybe Larissa does it better, but Shirley's at the top of the game. She has let me know that William is running just a couple minutes behind, so he's going to be here in just a minute. But we might have a second to dive into what I wanted to circle back to was Tori's question. And if you have another one, feel free to railroad me, but I did think it was a really good question about using crypto to solve real-world problems. She gave the example that her typewriter shop uses a bank that, I can't remember, Tori, if you said got hacked or compromised. There was a problem delivering payments to employees. The typewriter shop banks, but the bank couldn't deliver. Whether it was them or the bank that got hacked, the question was, could blockchain and specifically streaming payments be a solution for this? And I'm going to tease it, but then I'd love for you guys to give a comment. The short answer is yes. And something I'm excited to talk to William about is a thing he said a few years ago, is that smart contracts, they can be programmed to do many different things. Almost, you might say, anything. And that seems like maybe a good time to just give our friend William an intro, because I see he's just arrived backstage. So, William, if you can hear me, give me a second and we'll bring you right up. But, Alex, do you remember the first time we saw William Quigley and how he was talking about the programmability of NFTs specifically, but by extension, all the different kinds of things smart contracts could do? I don't think he talked about streaming in that instance specifically, but do you remember that?
Yeah, it was at the North American Bitcoin Conference in 2022, January of 2022. I took a shitload of notes, and then I was sitting. Yeah, we were sitting there in the audience watching that, and I just had the thought, like, I really want to talk to that dude. And and here we go.
Man, it was so great. He was one of my very favorite guests, and I will give you the brief introduction, and then I'll let him introduce himself. William Quigley is an OG of the blockchain space. Before crypto, he was a successful venture capitalist, successful businessman. He worked in titles and licensing at Disney. He did his own thing with a partnership where his partner invented the concept of trading video game items for fiat, for money, and went on to found a little project called Tether with some of his buddies, and then said, that's not enough. Let's build the everything blockchain. And now, co-founder of WAX, he is doing all kinds of work all over the crypto space, and is somebody whose thought leadership is worth your time. So without any further ado, Mr. William Quigley, thank you so much for joining us, and welcome to the Rise Up Morning Show. How you doing, man?
Good, thank you.
It's been a long time since we saw you, but we often refer people back to the conversation that we had when we were doing this not live, but like as a recorded show, because, man, it was just full of good bits. So a lot has happened since. It's been like 3 years.
That's crazy. Has it been 3 years?
It's been 3. I know, right? Time flies. I kind of wanted to bring you in on this question, though, that we were just discussing, because I know we don't have a whole day to talk, but this is a perfect topic to bring you into. We were talking earlier about a token that people are hype about right now. It's called Zebec for Zebec Network. And their whole thing is like, we're going to make payroll real time. We're going to give you a Visa, a MasterCard. We're going to meet you right where you are. You already know how to use this. Swipe it and spend your crypto. And as we often do with things that are getting a lot of attention in the news, we like to kind of pull back a bit and say, like, okay, are there competitors for this? Is the business model viable? Why wouldn't you just use a stablecoin or another smart contract platform? And we had kind of an interesting discussion about it, but specifically somebody asked, could smart contracts and streaming solutions be a good fit for someone like me? Our friend Tori, she works at a typewriter company that uses a traditional bank to pay its employees. And when the bank had a problem, payments were delayed. And so that's why we introduced you with that talk about, smart contracts, NFTs, and programmability. Generally speaking, are smart contracts a good solution for that kind of thing? And do you think Zebec or anybody else is delivering on the promise to decentralize the transfer of information that represents important things like money for people like Tori, whose banks are having a hard time paying them?
Mm-hmm. Well, I guess I would say this. It's probably the case that you could get most of what you want without introducing a blockchain, And so when my partner and I first started looking at what we could build, once smart contracts became viable, that was really after Mastercoin, we would get so excited about some application, and we think about it for like a week and a half, and then we realize, oh, wait a minute, you can do the same thing without a blockchain, and it'll be faster and less complicated and so forth. It doesn't jump out at me as something that's obvious, as something that's really necessary, to be frank. There's when I'm helping entrepreneurs develop applications using blockchain, I focus on one thing, which is we need to distill down what the very limited number of things that blockchains do exceptionally well. There's very few, but those things are massively valuable if your application can harness them. But as I've said many times, maybe I've said in your show, a blockchain is the worst way to do almost anything, right? Yeah. Almost anything. It's a terrible solution. But in this one little corner case, there's a few of them. It just turns out the market sizes of those few things are huge. But in those very few things, blockchains are exceptional. And for instance, if you were doing cross-border payroll, to people, the majority of whom could not maintain bank accounts, right? So now that starts to sound really good. But if you're in Europe or the US, Japan, I would think there'd be plenty of existing solutions that could help you.
So, Williams, you're telling me that the overwhelming majority of the crypto space that takes any idea and slaps a blockchain on it isn't really viable most of the time? This industry is full of only viable projects. What are you talking about?
You jest, but yet that's what. Yeah, I spend a lot of time going, okay, great. Look, a great use of a blockchain in the last couple of years has been meme coins. That's a great use of a blockchain. You could kind of do that with video game virtual items. You could trade them back and forth, but the game publishers always restrict them. And, there is a limited number and you have to accept whatever the game publishers have created. So for meme coins, fan-based coins, I actually think it's a great application, but yeah, most of the stuff we see, you could do the same thing better with a non-blockchain application. By the way, including stable coins, the Genius Act, you guys, I don't know if you guys have talked about that.
Yes, we talked about it, in fact, today, because we want your take on some of, what do you think about ban on yield?
Well, I will just say one thing. Nowhere in the Genius Act does it mention blockchains. It's not even talked about because we'll get into the whole concept of what is a stable coin, right? But for us crypto people, stable coins are very specific things, one of which is they work on chain, right? But you're going to see more and more of this blurring of the terms. This happened during the internet era too. A stable coin without a blockchain kind of just sounds like a private server that some company's using to register what you own, right? It's like, I'm not sure that's very different than a bank.
So that's like, you're talking about the language of the stablecoin bill. I say the Genius Act. It's interesting because I think that's going to have big time ramifications for, I don't know. I'm curious to get your take on it. We said earlier that one of the beneficiaries of this bill, it's going to determine a lot about how people are allowed to operate. I think, is it Athena that has it looks like a stable coin, but they call it something else. It's like a synthetic dollar maybe is what they call it. But I heard somebody give a take that that the biggest beneficiaries of this bill as it stands right now are likely to be mega banks. People who have the capacity to offer banking services that somebody couldn't necessarily compete with if, for example, they weren't allowed to offer yield on a stablecoin, and why that would be bad for the U.S., for U.S. consumers. But I just would love to know more of your take on this. And generally speaking, at this moment for legislation, what do you think is going on? Are we on the right track?
Well, we'd have to figure out who we is in that sentence. If we as banks, 100%, because had there been no stablecoin, right? Had we never done Tether, then there wouldn't even be a Genius Act, because the banks would never have even thought to ask permission to do what they're doing, because there would be no need to ask for permission. There's nothing special about what they're doing. They're modernizing the SWIFT network. And for your audience, they may not know what that is. That's just the network that all the banks interconnect to in order to transfer money. And we could spend a lot of time, but we won't because it's boring, on moving money and how horribly complicated it is to move money. People think, oh, I just PayPal you. No, that's a fiction, right? PayPal gives you a nice fiction of what happened. Nothing that you think happened. No money ever moved. And so the banks are modernizing their backbone, their back-end system. Now, there could be 10 intermediaries, there could be even more, but let's to wire money from one bank to another.
Yeah.
There are so many intermediaries. Each one of those who assists in doing that takes a little piece of the transaction. And if banks could have one network where they could literally know when I'm sending to you, it's like there's only one layer like blockchains do, then they could get rid of not all, but many intermediaries. Now, getting rid of those intermediaries means they save money. I'm willing to bet that in 5 years, no one is getting cheaper wires done. The banks are going to keep 100% of the value that they capture from doing this. I'm really positive of that. This to them is just a modernization effort of their back end system,
Of the SWIFT system, sure.
Yes.
Yeah, because what they're not going to do is allow you to withdraw these stable coins, though I hesitate to even call them that, from your bank, from JP Morgan, put them on your ledger, and now be transferring them peer-to-peer to people with JP Morgan really having no sense of who owns them and where they are at the moment. That's not going to happen. They are that's a stable coin, right? And that's what the privately issued stable coins like Tether do. And they will continue to do that, I'm assuming. And the banking consortium that's decided to label what they're doing as stable coin, but it's not, they will benefit from saving some money. And I don't think any regular consumer is going to have a sense of this. It's not like they're going to be, the banks are going to say, keep it all in your ledger. It's just not going to work like that.
Yeah.
Yeah,
And
basically, I was thinking about it, William, curious your thought, was almost just like having a whole bunch of just walled gardens where you have this, like, basically just like a loyalty points check, like, ticker that keeps track of your stable coins in each of these walled gardens, whether it's like, a particular bank or, another company happens to get a banking license to be able to create stable coins. And then they have that in their own walled garden. And then you're going to have a few actually decentralized options built on blockchains like, DAI and, your USDC and USDT and the current stable coins we have today that you can just have in a ledger and use in the world of DeFi, right? Am I thinking about it in the right way?
Yes, you are. And this is why this will, in 5 years, this will be such a esoteric conversation. I have a feeling like no one will know what stablecoins really were. Today you've got, you got three categories of stablecoins. You have privately issued stablecoins, folks like Tether, USDC. You have decentralized stablecoins, that's like Make or Die. And the difference between those two is really around the form of collateral used to back up the stablecoin. And then you have, coming soon, sovereign issued stablecoins. And I have believed for a long time, I'm sure I've said to you guys, that eventually all the major economies will have tokenized their fiat, because it's one of those rare technological innovations where there's no downside. There's only upside to tokenizing fiat. So that's going to happen. And then you have the bank consortium issued thing.
Sure.
But I hesitate to call it a stable coin, because at the very least, to people like us, it should be an on-chain, accessible to anyone, transferable to anyone token. To me, that's kind of bare minimum. And this will definitely not be that. It will, you've heard the term, which gives me like chills, permissioned blockchain, right? We have another word for that. We just call it a freaking private server.
Yeah.
Right? Yeah, a database, right? It's a freaking database, a private database. So I saw some remarks from some banker who was like, well, yeah, no, we'll do something with blockchains. Of course they'll be permissioned. It's just a freaking private server cluster.
So something you said a couple years ago, I want to read people into this. Like you said this about NFTs too. Blizzard, Microsoft, they are going to offer something that they will call an NFT, but it's going to have terms. It's going to have conditions. It's going to be in their database. It won't be tradable on chain freely the way NFTs truly are. That's not an NFT. And that's what you're saying about stablecoins, right? Is Visa and MasterCard they're going to take the Coinbase approach. You'll have an account, but the money's going to be on their side. They're going to get the benefit. They're going to get the interest. And especially if there's a ban on yield-bearing stablecoins, then who's going to get the yield is going to be probably their CEOs, et cetera. You'll use it on their platform. You'll use MasterCard's stablecoin on their platform. It'll be like, points. And I just want to zoom in one last thing. The distinction between digital and tokenized is something that you helped me understand the importance of a couple years ago when we talked. And Alex, I know this is a big light bulb for you too. I don't know why it's so difficult sometimes to introduce new language, but it's important. Like to make the distinction, you say tokenized fiat, it almost seems inevitable. Can you drill into that and explain the difference between, just very clearly for people who may not have a distinction in their mind? What is different about tokenizing an asset on chain than digitizing an asset? And why does that seem inevitable to you for fiat?
Yeah, and by the way, what's interesting, Evan, is 10 years ago, the conversation was easier to have about this because people in blockchain were steeped in it, and they were building on blockchain, so it was more intuitive to them. What was different? What was different? It's a very hard thing to quickly summarize. I think I might have done it on your show, but it probably wasn't quick, but I'll try to be quick. First, just to say,
we're timing you go.
Digitization is an element of tokenization, but it's not, they're not the same thing, which is why early on, when we said, hey, we're going to create this tokenized dollar, a lot of people with Tether, and I'm talking crypto people, like hardcore crypto people, were like, oh, wow, that's pretty interesting, dude. You've made it up to the 1960s when we digitized cash, right? Yeah. And I'm like, well, no, obviously, tokenization is different. Probably the simplest way to think about it is when you tokenize an asset, I like to use the example of an emoji. You can transmit it at the speed of light back and forth between people, and it enjoys all the traits of a non-physical thing. It's effortless and generally costless to transfer. But the problem is, and this is especially a problem when it's money, is if I make a copy of my emoji and I send it to you, you don't know what the original one was. And therefore, a lot of duplicates and counterfeits can proliferate. So tokenization eliminates that because all things on a blockchain are accounted for and can be traced. And if they're born out of a smart contract, they can be linked back to that smart contract. And if, for instance, Tether issues a new token, a new Tether token, it came from that Tether smart contract. And for now, the audience who's not as familiar with this will have to just take it as an article of faith, but they can look it up. You can always see where a token is born. It's similar to if you had a US dollar and you could somehow verify with certainty, with no effort and at no cost, that dollar had been printed by the US Mint, then counterfeit dollars could not exist. Well, that's what tokenization does. It allows a digital object to be created that can be proven with certainty at no effort and no cost instantly that it is genuine. And when you think about those traits, instant, no cost, no effort, then you start to go, okay, and by the way, this is how I instruct entrepreneurs. I say, just those ingredients I just gave you, those allowed us to come up with something like Tether. Just by distilling down those things and saying, these are the only things I can work with. Is there anything in the world humanity would benefit from items that possess those characteristics? And of course, the first thing you think about is, money that can never be counterfeited and also can never be pulled. The modern banking system, because it exists on this sort of credit-based system, just because somebody, quote, sent you money doesn't mean they can't reverse that, right? We call this in the credit card field chargebacks. Well, in the tokenized currency world, there are no chargebacks unless you, the recipient, allow them to be done, which is pretty cool, right? So I also looked for that in the Genius Act. What does it say about the inability in a true stablecoin for it to be retrieved if the recipient doesn't want that? And of course, there is no such capability because the banks are developing this token, whatever we're going to call it, in a way that it's no different how regular money works now. They'll be able to take that out of your account. In fact, it's written into the Genius Act that they can. The Genius Act requires that they be able to freeze or reverse any transaction that I guess the government deems went to a bad guy, which doesn't seem to me to be like a trait we want in a stablecoin.
Oh, hey, this is actually perfect time. I'm sorry, William. I have to run for a call that I thought I had, a business call that I had at 9:30 right now. I have to hop off, so I'm sorry to jump right here, right at the end of your run. But nice to chat with you, Alex. Evan, I'll talk to you guys later. See everybody later,
brother. We'll see you on the show. I am a little bit glad that we won't have the problem of William. Fun fact about our Will, he comes from a family. He's William Watson the Fourth. And he comes from a family where not only is his dad William Watson, but he has a brother whose name is not William, but his middle name is William, who goes by William. And I mean, it's like there's so many Williams all the time on our show. So you're in good company where William Maxey's here.
I have a brother whose middle name is William, but he goes by James. I don't know why a brother would go by your name.
Yeah, I know, right? Like, come on, man.
That's funny.
They're the modernized crypto version of George Foreman.
Yeah, that's right. Yeah.
William, I was wondering if, as we talk about the Genius Act a little bit, one of the things that we've talked about a lot is that, regulation and legislation have sort of just become standard run-of-the-mill buzzwords in crypto, and we never really stop to drill down on like, okay, hold on, what exactly do you guys think regulation would look like that would advance the space? Because that's kind of the adage that you hear all the time is like, oh, we're in a holding pattern until regulation is passed, which is obviously such a gigantic, broad and sweeping term. And then you see like something introduced and it's either just looked at as being good or bad, usually not with a whole lot of clarification or distinction. Like, the comparisons between the Genius Act and Fit 21, or the, all of the various different bills that have at one point been present before Congress or before the president or whatever. Is there anything in particular that you would say, we're looking for, or you would be looking for, that you would want to see in a piece of policy or legislation that you would say like, okay, this actually does like really make a difference, or this actually really does open up the opportunity for the industry to advance meaningfully?
Yeah, and first I'll just say, it's why I can't stand that word regulation, because how many times have we heard, well, it needs to be regulated. Oh my God, that thing is not regulated, without any thinking about what that stupid word means,
Yeah,
right?
huge pet peeve.
Like, I think I assume everybody is happy with regulation if they're allowed to define what that means, right? If the regulation means banks can't screw us over, banks can never ban us from the banking system. I love that type of regulation.
Sure.
And of course, to have ever created this like fable that crypto wasn't regulated was preposterous, because we were all subject to the legal jurisdictions of wherever we live and the millions of laws that can be, come down on us if we do something that we're not supposed to do. So crypto was always regulated. But if there was one area I think I would love to see, it is in the specific point of which agency has primacy when it comes to managing and codifying the regulations into practical rules. With crypto, I don't think there's ever been anything like it, at least in the United States, when it came to the chaos at the federal regulatory agency side. You had initially, and I give them some credit, the IRS said, we'll give it a shot. We think we should have jurisdiction over this, and we deem crypto property. And then the CFTC, Commodities Futures Trading Commission, said, hold on, it's clearly a commodity, and therefore it comes into our domain. And then the SEC said, no, these are securities, and so we get to decide how it gets regulated. And then the Treasury said, it's money, and this is who manages it. It's us. And when I was originally building stuff, and I asked my my lawyers, so what do we do here? They said, well, you just follow the rules of all of those agencies.
Oh no.
You're like, oh, and all of those agencies in all of the countries in which the crypto exists. It was nonsense.
Yeah.
And so we saw what happened after 4 years of Gary Gensler at the SEC, who many naive crypto people, when he was like teaching his little blockchain course at MIT, they're like, oh, this guy's going to be cool to us.
Also
Yeah.
me. I was like, come on, man. That was great.
That was me at the beginning of my
Shame
of my
on
journey
you.
that had
I
taken,
know, man. I
know.
held out hope for so long. I was like, let him
We've-
cook, guys.
We listen, just in my small defense, I've done a lot of grievance airing and a lot of reflecting and a lot of learning because I was exactly that night. I mean, I kind of entered the space meaningfully in a place where I was like paying attention to stuff right as that course was taught, and then the announcement, and I was like, oh great, okay, I've heard some of these things. I had absolutely zero prior context before like that exact moment in time. Knew
That's
nothing
fair.
about anything, but yeah, since then I've called it one of my greatest disappointments, and then he just broke my heart repeatedly for the next.
Not to derail it, but like, something that really sucks about the crypto space, I think, is like, you talk about blockchain and the people who've been building for a long time, or who, the cypherpunks. I feel like there's a real disconnect, almost like a dartboard. You know what I mean? Like, where it started as this
for
little
sure.
nucleus at the center, Hal Finney and those guys. And then there came a new class of Bitcoiners. And then there were people who were interested in alternatives. And you got the Ethereum and the smart contract people. And then you got the DeFi people. And then you've got, like all these expanding circles of people who know each other, but don't feel like a whole unified ecosystem. I feel like there's a lot of gaps in our space.
There's a lot of siloing inside of an industry that
Which is so
prides itself
weird.
allegedly on interconnectivity, which
Yeah.
is funny.
It's very true. I agree with you completely. And I do like the fact that you call them the Bitcoiners. There's this, it's always struck me as so odd that people who are like Bitcoin and like it exclusively and get angry at anything else, that these people have a voice. It's just a very bizarre thing to me. We call them Bitcoin maxis, right?
Yeah.
And there, in fact, when you talk to one of the maxis and you say, "Oh, you're into crypto," they'll correct you. No, I'm into Bitcoin. Crypto is bad, right? That's the altcoins. And it's such a strange thing because it's just software, right? Can you imagine, I'm a CEO, I hire some developers and they say, Python, that's all we do, right? We only do Python because it's the best in all circumstances. Doesn't matter what the conditions are. We only do Python. It's a strange thing, right? Like you don't see the alts do that. People who are into the alts also say, "Oh, Bitcoin's great too," right? So that was a strange curveball I never expected to develop in crypto, where there's a group of people who kind of want to delegitimize the other types of tokens. That's kind of odd, right? And it's bad enough when you're trying to unify a bunch of decentralized thinking people, right? When it comes to, hey, let's make sure that we're treated fairly in the regular mainstream market, let alone when you have people saying, "Oh, if it's not Bitcoin, it can't be legit." And so I think now we have to be very cautious about looking at the way the Genius Act gets interpreted by, let's say, the Treasury Department. I'm very wary of it because what often happens is Congress issues a rule, creates a law, and then the bureaucrats within the federal agency, they want to expand their fiefdom. And so they start to add a lot of rules that are more broad than what the original intent of Congress was. So, I also should say that when it comes to stablecoin and stablecoin legislation, I don't expect privately issued stablecoins or decentralized stablecoins. I don't expect those to go away because, as we talked about, this whatever the bank consortium stablecoin is, it's not going to allow people to do DeFi, presumably, right? It's if anything, it's more like a central bank digital currency. Yeah. The way I have always thought China would roll out theirs, permissioned blockchain, whatever that means. And you can't take that stuff off and do what you want with it. No. We will see if people try to tokenize the so-called bank stablecoin and put that on a blockchain, right? The way we all think about tokenization now, that could happen. But if that did, I assume it would be a violation of your bank's terms of service, and they would seize that account.
Sure.
Yeah, I think.
And as far as having an issue with yield-bearing stablecoins, this is of course a great benefit to people like Tether, right? Yeah. In the
right.
I've been doing this venture capital thing for 35 years, so I kind of have a rule book, the way things work. The first company to roll out a thing, it gets very broad adoption because no one's seen it before, and anyone who wants to use it has only one choice, right? Number two comes in, and number two has to offer the same thing that the first guy did, but something more, and then so on and so on and so on. And that's why, as a VC, when you're backing like the fifth entrant into a space, that entrant has no margin left. It has no profit left because it had to give it all away to entice you to use, the Johnny come lately. So, Tether probably, this is probably a benefit for Tether because it's like, we're not going to give a yield, which, by the way, I never thought a yield was that important. What's so valuable about Tether is the very fact that you have tokenized US dollars. Like making a little vig on a yield is sort of, who cares? Especially when you think, and you always have to do this, of the fact that there's 9 billion people in the world, and like 5 billion of them don't have reliable safe access to banking. And everyone in the world, if they could hold any currency, would hold a dollar. So a stable coin like Tether is an amazing thing, whether or not you earn a yield. Remember, checking accounts for up until like 30 years ago, maybe 25 years ago, were legally not entitled to interest rates. They were not allowed to issue an interest rate. And the reason was the banking regulators were afraid that if they allowed banks to offer interest rates on DDAs, demand deposits, or checking accounts, that the banks would run themselves into the ground by offering ever greater interest rates until they pushed themselves into being unprofitable, which is somewhat of a theme we see, right, with venture-backed companies. They kind of give away the product for a long time, trying to hook you before they start to turn on the profit engine.
Sure. No, Alex, I know you had something a second ago, and I know you got to go in a minute. I want to defer to you really quickly, but I have a follow-up.
Yeah, no, I guess, I think that the concept of being able to put your money to work for you is incredibly important. But I would agree, I think, with your characterization of yield's importance, like as it relates to being native to the stablecoin in question, as being, I guess, probably a superfluous, ingredient in that whole thing. I would say that's totally fine. I would love to see more competition with more different DeFi protocols and different places that can offer yield as funded by, X, Y, and Z, instead of having to try to figure out how we're going to bake some sort of, healthy emission like into the stablecoin itself, so that whatever the interest that comes out of it is actually like not just hyperinflationary. Because of course the number one question you have to ask when you're getting yield on anything from anywhere is, where does it come from?
Bingo. That's right.
And in this case, it's treasury bonds, which are mostly probably paid for by like taxpayers.
Yeah, so I would say true. In that sense, I do completely agree. I have not, again, one of the things I love about talking to you is that I always think about things that I feel like, okay, I feel like I should have known that, but I hadn't quite thought about it in that way. And so, native yield seems a little bit more superfluous than perhaps I had originally thought it was.
Yeah. And but also I want to emphasize what you said, because if somebody watching this only got one thing out of it, it would be tremendously useful to remember, anytime you are earning a yield, and by the way, this is not just on freaking stable coins or DeFi, it has to do with everything in life.
Everything.
Right? Where does the yield come from? And I want to just mention, I get pitched a lot by wealth managers and money managers at the big banks, and they're always slinging these what in the industry we call structured products, which are like, it looks like a bond, but it kind of gives some sort of return that's shaped like a certain basket of stocks, right? I really like these things. And but my question is always, okay, where is that 9% yield coming from, right? Because I know you can take the money I give you and put it in a risk-free account and yield 4.5%, whatever. But how do you get 9%? And that is always the great mystery you have to untangle, right? Now, the difference, of course, is when I'm dealing with, let's say, a US-based large investment bank, I do feel like they are subject to a lot of regulatory scrutiny, and a certain amount of their assets are backed by the US government and so forth. But with these, the crypto people, unfortunately, and especially 2021, 2022, they got introduced to the risks of not understanding where your yield come from. I'm thinking about Celsius, right?
Sure.
When I asked people, not to be a dick, but I really wanted to know, people who lost a lot of money giving their Bitcoin to Celsius, I said, where did you think the 20% yield was coming from? And they were like, oh, I thought those guys were just smarter and they knew where to put it.
Well, and one of the places that I know for a fact often loses people in thinking like, okay, where does the yield come from, is this idea that like, okay, if a bank makes its money and generates the interest that it's able to charge people that it can pay on your savings account from charging a higher interest when they issue a loan, okay, great. As long as protocol whatever is issuing loans, then yeah, I understand that someone is charging someone else money and I just get to earn more of the interest. Like that kind of flow makes sense. But we never stop to think about, okay, well, is the protocol you're talking about that is paying you actually issuing loans? Is anyone actually paying them to do whatever? Or is everybody and their grandmother just sitting here supplying whatever, trying to earn interest on it, and then no one is borrowing anything, and then wondering like how it gets propped up, which is kind of why I like to point out like Aave, for example, as a group that like as soon as that seesaw tilts towards the supply side so heavy, their interest rate just goes almost to what's it sitting at right now, like 2% or something, because most people, but you know, a lot of protocols are like, oh no, we can't hemorrhage our users by dropping the interest rate that low, which then begs the question like, okay, where are you filling the gap in, because no one's actually borrowing any money from you, so you're not actually earning anything right now. It's got to come from somewhere.
And you know, in the case of Celsius, I done a lot around the whole crypto lending thing. I could talk a lot about it. It's a great business. But I couldn't understand why they kept raising so much venture capital, you know? And I'm like, but you know, Tether runs with under 100 people. Like, why do you need so many people? Crypto lending is really straightforward. You're harnessing a lot of software that already exists. And it turned out they were using a lot of that venture capital they were raising to supply the yield. And if you think about that, that's freaking crazy, right?
Cards,
Using equity capital.
Tether, isn't Tether it's one of, if not the highest like revenue per employee of any organization on the planet?
Yeah.
Like by a shitload. I think Laura Shin just posted about that yesterday. Someone said it was something else. She's like, no, actually it's Tether. And she had like a chart and it was like Tether's line, and then everyone else was like way back.
Yeah, it's a little unfair, but what it does, by the way, what it does portend is, which is what I loved about crypto from the early days, when you are building in an open source, true open source environment, man, you can avoid a ton of costs, right? Because you're the beneficiary of all of this technology. Somebody, I think it was Sam Altman, said with AI, we will one day see, seems possible, like a sole proprietorship company generating 1 billion in revenue. I can totally see that. That's one of the great benefits of crypto is its open source legacy. And of course, even Bitcoin obviously benefited from like decades of open source development, right? It was the midget standing on all of these giants who had built amazing tech prior.
Really quickly, I will say, to reframe the conversation and take it back, I know Alex has to go too. I want to catch up with where you're going, William, what you're doing. But Alex, do you have a very quick final thought before you ride your dog and pony into the sunset?
Just to say thanks again for joining. It's always good to talk to you. I of course could sit here for hours and hours and hours, and we didn't get into any of the gaming stuff, and so much stuff has happened in the world of Web3 gaming since the last time you and I spoke about that. So I'll probably just have to bully you into coming back a second time to do like a gaming focused episode, just because I know you have been involved in that for so long. And of course now, I mean, you want to talk about things that have raised an inordinate amount of venture capital and produced very little in some cases.
Yes.
Gaming is a hotbed of that kind of stuff. And I'm sure you have a lot of some spicy takes about it. So thank you for giving us the time. I'm really excited that you were able to come. I still have like a Google Keep note that I wrote during your presentation at North American Bitcoin, and that was like one of the first ones that I had taken a bunch of notes on, just because I remember thinking like, oh goddamn, okay, this is like, all of this is just making so much more sense, because at that time I was fresh. It was like my first or second conference ever, and I was still that guy who was like, maybe Gary will be good for us.
I'm glad you say that, because one of the things that always frustrated me early on in crypto was it was a bunch of babble, And I almost felt like a lot of people really didn't know what they were talking about. They just babbled.
Oh yeah.
And for me, it's got to be broken down to like basic levels we all get.
Yep. I vividly remember you making that exact point. And I couldn't agree more, especially in the world now where social media has grown to what it is, and so much of the crypto content that is here is basically just someone who's proving like, hey, I read a brochure and I'm gonna say some jargon to you, and don't question me. And my technobabble will make you believe that these are not the droids you're looking for. I've done the research, and trust me, bro.
Yes, trust me, bro.
Okay, Alex, I will see you bright and early tomorrow, and yes. I will round some things up with William. If you still got just a couple minutes, I would really like to hear before you go what you have been up to lately, because you've been a busy guy. If you're listening just now for the first time, you're just joining, this is William Quigley. He's a friend of the show, longtime venture capitalist, founder, businessman extraordinaire, and we didn't talk about it yet, but you've been quietly working away over at WAX. So I'd love for you to tell people about that, or just generally speaking, like, what you personally are working on right now, like the problems that have occupied your attention. What have you been up to? What are you trying to fix?
Sure. And it's a lot, right? So I'll try to
no, man, I have time
categorize.
If you have time, and our folks want to hear it. And I will say, we do have to get you on an episode of After Dark sometime. We have the morning show is a little more, I will say, you can say whatever you want anytime, but the After Dark show is where we like let our hair down. It's BYOB, DYOR, and our expert guests and friends let their tongues wag. I will never forget the time after we wrapped our first episode together all those years ago that I will just say you were great on air, but after we went off the air, I was like, oh man, this guy, like, you shot right from the hip and you hit a lot of people in their hearts. You deconstructed a lot of protocols and all the fugazis, and I was like, oh my God, we gotta have William Quigley uncensored. So,
by the way, it's one of my favorite things is the nighttime chats I have with people in the crypto space, because there's things you might not want to say in a recorded session where it's supposed to be CNBC like and everything, but the truth is there's a lot of stuff that's just, hey, what do you think about this? And somebody says, no, that's a bad idea.
Bunch of shit. Yeah.
Oh, okay. Yeah, you're right. I guess I should never mention that again.
Yeah, so we'll get you on After Dark and we'll have a drink and let it all hang out. But tell me what you've been working on. What are you building? What are you doing right now?
Sure. So I would say it's a few areas. One, of course, with WAX, and what the principal focus of WAX is, and this used to be something that no one even talked about, let alone was building, but it was a blockchain that costs essentially nothing to use, that is designed for ease of use by especially by people doing anything in the video gaming world, because that's where I had spent so much time. The companies I was running prior to getting involved in crypto were around buying and selling of video game virtual items, what we call marketplaces, right? And I can tell you, when I was first talking about what we were going to do with WAX, this was 2017, people had heard of Ethereum, of course, because it had been released in July-ish 2015, but no one was using it, right? And I knew, because of my work prior to Ethereum around the Mastercoin protocol, which was the first attempt to put a smart contract on chain. And people who don't know, most of the early guys in Ethereum came from Mastercoin, and it's where Tether was originally launched, on the Mastercoin chain, now called.
Put a note in that, because it's your homework to look up Mastercoin. Continue.
Yeah, it's one of those things that's been lost to time, but it was the first attempt to do what I call putting an intelligent layer on a chain. And fun fact, when we mentioned this to the Bitcoin people, the guys who were actually building the core infrastructure of Bitcoin, their response was classic. It was, who would need an intelligent layer on a chain? Yeah. So Wax was the point of Wax was, hey, we're going to take all these skins, which are video game virtual items, the flavor of them, and we're going to allow people to do whatever they want with them, because in the video game world where we were running our marketplaces, the video game publishers were very aggressive about freezing accounts, banning accounts that traded virtual items, which always annoyed me. But that's just, their philosophy was, we own those items, you guys don't. And so our thought was, fine, we'll put everything on the chain and you can do what you want. And it really wasn't until it was about April of 2020 when we did the deal with Tops, where we tokenized one of their IPs, which was Garbage Pail Kids, where I think everybody in the space finally got it, because the thinking was you couldn't have like virtual items unless they existed within a blockchain-based game. And we were like, you could have the items and they could work in many different games. So maybe the first thing should be the items. And when we did that with Garbage Pail Kids, I had told Tops, I think we'll sell these in 30 days. We'll probably sell all of them. I thought there was like 50,000, and they all sold in 24 hours. And then that was it. That was kind of the starting gun. People think NFTs took off in 2021. That's when they hit mainstream. But throughout like 2020, we were doing more and more and more of these releases. And the only regret I have is that all the charlatans came in then and started to hawk these ridiculously overpriced NFTs. And it was more of a scam. And NFTs now have been inextricably linked to pretty pictures that you trade that look like apes and you lose all your money on. But, an NFT is just a way to secure a piece of intellectual property so that it's authentic and it can be free, right? So for those who think NFTs are never coming back, they will. You probably just won't even recognize them as NFTs.
We might not even call them that on the front of it.
Probably not. Yeah, probably not. Like you'll call it your passport, your driver's license, right. Your free digital gift or whatever. You're probably right. So we have been working on Wax more and more towards, by the way, another thing that didn't seem to exist in 2017 was most people just issued, they issued general purpose chains, right? That's what they all were. Hey, here's a blockchain. Maybe it does a consensus a little different. And my view was these should be purpose built for certain capabilities like video gaming or trading skins. And I believe we were probably the first purpose-built chain from that sense. But that required a wallet and marketplaces and other elements that initially we had to build. And part of what we're trying to do now is more and more move towards this. Decentralization is an idea. It can never really be perfectly executed because you're always going to be reliant on the electricity that someone's giving you, right? Or, NVIDIA servers. Like you'll always be reliant
Amazon
on someone.
Underneath the internet,
or
somebody
AWS.
somewhere.
Yeah. But you can get further and further down the road. So we've been doing a lot of that, and then experimenting with, what Alex touched on before he left, like what will make mass market blockchain video gaming finally arrive? It hasn't yet. And I have lots of theories, but certainly we can't discount the fact that blockchains are really difficult to work with. And I think that probably is the principal objection people have. It's just this intimidating thing. I mean, I would say the vast majority of people I talk to at dinner parties say, I don't want to deal with blockchain. You got this thing called a ledger, and that's complicated to use. So if you're not comfortable with using a ledger, then you're probably never going to adopt blockchain video gaming. So we're still experimenting with ways that maybe we could get people to use it with all the benefits you get from a blockchain, added to your video game. I do believe, by the way, that when blockchain-based video gaming finally gets its mass market moment, that's going to come from a native blockchain company. I'm sure it'll never come from existing standard video game companies that do something innovative with the blockchain, because they never do, right? The companies on one platform, they may buy a company in a new platform, but they never innovate it themselves, because W-2s generally don't like innovation. The other area, of course, is AI. So it's so overhyped, it actually like annoys me. There were a lot of early attempts to integrate AI and blockchain. And I thought most of those didn't really add anything to the suite of products out there that we can use.
Yeah. You just slap a token on it kind of thing.
Right. And I might have said this in the last time we spoke, it took me 3 years of building blockchains and screwing around with smart contracts to eventually figure out what a blockchain really was, right? It took a long time. Like, I could build them, I could use them, but what are they? That's very hard, right? And you see this with most kinds of deep dives. People who've mastered something sound like it sounds very simplistic what they say, right? You're someone who's a great physicist and been struggling with all the concepts for a long time. When they speak, you're like, oh, that seems simple. They've simplified things that are quite busy and technical. And so it took me a long time to do that. And then eventually I was like, okay, now I get it. So I'm at that stage with AI right now. It's probably even more of a mouthful to try to really figure out. But I'm trying to really understand. I'm never going to understand it, at the Sam Altman level, but I'm trying to understand it enough to where I can say, okay, let me distill down the elements of AI that are fungible. And now let me take those and say, how would a blockchain-based system benefit? And I've got some ideas, but it's such a rabbit hole when you're dealing with it.
Sure.
If for no other reason that I remember in 2020, the pace of innovation in DeFi, I could barely catch my breath. I'd never seen an innovative cycle that rich in my life before. Well, AI is kind of at that level where every week or two, something else happens. And so I'm trying to do that. And that's a large amount of my time.
Are you hip to, do you know Eric Voorhees?
So I've interact with him, but I wouldn't say, we're friends, whatever.
Sure. Okay. So
of course I know him.
Yeah. Okay. He right now, for folks who don't know, is working on Venice AI. And he was somebody who really helped me understand why AI might need blockchain. And what he said that turned on the light bulb for me was only blockchain can provide what we've talked about for something digital, that errorless, effortless proof that it is what it claims to be. And in a world where everybody's going to be interacting with an AI online and won't be able to tell, when they see my videos online, they're going to see someone who sounds like me, looks like me. Their eyes and ears will not be able to distinguish between a very convincing copy and the real thing. And so we're going to need cryptographic proof. We're going to need AI that has private keys and users that have private keys, so that when I'm telling ChatGPT about, I don't know, an issue I'm facing in my marriage, that OpenAI doesn't get access to it on the back end, that AI responds only to me. And it goes between me and AI adversaries on the internet that I'm not going to be sophisticated enough to outpace, whatever. To me, that's like the use case where crypto.
So
and
I
AI
completely agree.
coincide.
And that's an example of, Eric Voorhees has been toiling around in blockchain since the beginning, right?
Yeah.
Created the very first blockchain-based game, Satoshi Dice.
I didn't know that. I did not know that.
Yeah. How much did he sell it for?
I don't know.
He gave it away.
Are you
He
kidding me?
sold it for-
Of course he did.
He did 100. He only received 128,000 Bitcoin.
That's all.
That's all he got. 128,000 Bitcoin is what he sold it for. We could talk on and on, about Satoshi Dice. But to emphasize what you said, see, that's someone who really understands what blockchains can contribute and what they can't. And so this idea of certifying that a thing is genuine, right? The elimination of counterfeit. Like, as we get into the AI mass market adoption, as you point out, there'll be no trust with anything. The other day I saw my partner tweeted me some recent video snippets of people doing a bunch of different things. There was like 10 little snippets, and they were people saying, look, I'm worried about what AI is going to do. And, look what these news articles are saying. And all of those were not real humans. Those were AIs, right?
Yeah.
But the voice and the synchronization of the voice and the facial movement was good enough to where my eyes couldn't tell if there was any issues with it. And so that's today, not 2 years from now. And so what can blockchain do? Its best and highest use is to provide certainty that when you receive a thing, with no effort, at no cost, that it's the genuine thing. That, to me, has a very important role with content and preserving the ability to distinguish fake and real. Ideally, it would be integrated into browsers, right? And it would be, you're right, you would have your own key, and you'd be able to both publish as well as easily assess, did this come from this guy's smart contract? So I know this, YouTube or TikTok content is legitimate. That is a important contribution blockchain will make. And it'll probably just be done in the background. Most people won't even know it.
Right. They won't call it blockchain. They won't call it crypto. They'll just say, oh, it's my ID.
Oh, yeah. It's my game. And I'd also say, like a lot of people, I spend a fair amount of time trying to think what the implications are of all of these things that AI is doing. And well, it's very hard to think on the second and third and fourth layer effects of it. But since I've been, a young guy, I've always had this steadfast view that technology will disrupt specific applications and even industries, but net, it produces more employment opportunities than it takes away.
Sure.
I still believe that with AI, though I think I'm an increasing minority. But I do understand the concern that the speed at which jobs will be eliminated could be a problematic and something probably governments will have to ultimately address. This is the first time where a technology has been introduced where the people who are most disrupted are the people who are almost the most skilled and earning the most money. We got lazy into thinking all innovations first take out the lesser skilled and then the medium skilled and so forth. And that your safety net was intelligence, creativity. And now we see, wow, I'm not sure creativity is all that special. At least the facsimiles of it that AI produces are indiscernible to most of us from what we think is authentic human produced creativity. And so I sometimes say, if you're 20 years old, you'll figure it out with humanity. If you're 50 years old, you'll be retired by the time it really becomes a problem. If you're 30 years old, 35 years old, I think you've got to take this stuff seriously.
Yeah. DeWoofy, a friend of ours in the comments, said, let them eat AI generated cake. And we've got a couple other comments I want to read real quick. From Nick Kusters over on Twitter X. He says, first of all, going back to GPK, he said, I got Joe Chaotic gold 1 of 1. So congratulations on your killer collectible.
Amazing.
Yeah. And I want to go back to Wax for just a second because you mentioned several things that we can pull on. When I pull up the Wax website for people who are listening to the future in audio only land, on the site, wax.io, it says the everything blockchain. And you talked about like starting with this very specific purpose. Utility first, making it fast and cheap so that people can have these novel experiences. But I'm curious about the branding, like the pivot to the everything chain, because it sounded like you were kind of picking on some of those people who are like, no, we're the blockchain for everything. But that's the branding and that's where it's going. And I also want to hear you talk a little about gaming, where you think others are getting it right. So can we start with Wax? The everything blockchain.
Yeah. And I think the reason we've kind of tried that out, and a lot of this is experimentation, right?
Sure, totally.
Is that at the end of the day, if your blockchain has a really easily accessible wallet, you can use your traditional OAuth logins from Google or PayPal or wherever, Facebook to log in. You don't need to manage the private keys. If you have a chain that is essentially free or extremely low cost and is fast, so for about, I want to say 5 years, up until probably early last year, Wax was always ranked #1 among all blockchains when it came to daily transaction volume, because it was really easy to use and because it cost virtually nothing, right? Solana, with the meme explosion, I passed it up. But if you look at something like Wax compared to, let's say, Ethereum's volume has essentially never changed. It's like 1 million transactions a day. Bitcoin about the same, maybe slightly less. And then Wax would be doing, when there would be a popular game, 25 million to 30 million transactions daily with absolutely no problem, which means you could put anything on it, right? It was designed for video gamers because that's where we came from, but you could tokenize any asset. You could use the Wax wallet, which still today, the Wax wallet is 7 years old, still today is the easiest wallet to use. When I'm bringing people into crypto, I say, just use the Wax wallet first. Once they go from that to any other wallet, they get very frustrated because the other wallets aren't designed like the Steam wallet. For those of your team who are in the video gaming, Steam is the biggest digital download platform for downloading video games, keeping your virtual items, and so forth. So we got inspired by that, which is how we made the Wax wallet. And the fact that 7 years later, it's still, I'd say, the best wallet all around for ease of use shows how little innovation really takes place in the ease of use area. For most of crypto, I would say, certainly where most of the dollar-based trading has gone, it's been in DeFi applications, a lot of which are a little complicated to use, right? But it's because you can make money. And so that's where all the kind of the effort is gone. It's on that speculation side, not on broadening it for ease of use among everyday people. Yeah. And when it comes to video games, the notion of it being hard and stressful to use is anathema to, of course, the concept of video games, which is supposed to be fun, right?
Yeah.
And
distraction, absorption, total immersion in something different. Yeah. So hence why that, it's kind of more aspirational. I'd say we're trying to say, look, you can use this thing for anything you want. And so who then are you worried about in terms of, I was at Consensus, Before that, we were at ETH Denver, and we have a lot of friends who work here, live here, play here, all around on chain everywhere. And I feel like if I just had to throw some names out, especially for gaming or even for like everything general purpose, probably Solana is winning the mindshare game. Last year, you might have said that Base was closest. And there's always a rotating cast of L2s who've like got the hot new airdrop coming or the incentive or whatever. But
yes,
Avalanche has kind of like staked a flag and spent a lot of money to make people think of them when they think of gaming on chain.
but no one uses it.
But okay, so then let's keep unpacking it. Then you've got Immutable X is trying to stake that kind of a flag.
Very few people using that either, right?
So like then, talk to me. Why am I hearing so much about those chains and what they're doing, and why am I not hearing more about what are some of the cool things people are using Wax for right now? Because I feel like I just don't see you guys as much.
So yeah, a lot of it is outside the U.S. First of all, and second. I think when it comes to blockchains, everything is about the token and trading the token. I just think that's
unfortunately.
Yeah. And is it, Wax is not traded in it's not traded on Kraken and it's not traded on Coinbase.
Sure.
So if you're a US person, you probably haven't done anything with it because it's not traded on those two platforms. The gaming industry, really, the center of it is, it's South Korea and then Japan, but Asia in general. And that's where we put all of our focus, right? So
that was intentional for you guys.
Yeah, and maybe to the detriment of the chain. But one of the things I've seen, because obviously I've been in this a long time, my partner and I were the second largest buyers in the Ethereum crowd sale. We like really were active in all of the buying, particularly during the ICO period. And the thing that is most curious to me is the difference between the number of people using a thing in blockchain and the price of the token. And meme coins kind of take that to their logical end where they have no utility, right? They're just randomly produced things. And I mean, I haven't looked recently, but probably 10 of the top 100 tokens in CoinMarketCap are freaking meme coins.
Yeah,
right. Which have no, and
Right.
I haven't looked recently, but during like 2024, late 2023, there was like 5 tokens who had been involved with fraud where the founders had been prosecuted or jailed and the companies had gone bankrupt and those tokens were still in the top 100, right? Or the entire dev team is left and no one's been building on it for 2 years and they're still traded. So that's this curiosity about it, right? So you have to look at what people are doing, right? Versus the token. In crypto, the narrative centers around one thing, the price of the token. And the reason why gaming people went to Solana, which made sense, is because that's where people had money to spend. The very same reason why ICOs originally launched on Ethereum, because Ethereum had gone from like, a couple of bucks to like $100, $200 in 2017. And people were just flush with money. And now they wanted to do something with their Ethereum. So they said, oh, you know what? Oh, I'll just buy other tokens with this thing called ERC20s, all these ICOs. So that is a very it's a constant kind of pattern. And so Base was the same way. Of course, Base was affiliated with Coinbase. The token had some value and people were like, oh, I'll do it on Base and maybe I'll get listed on Coinbase if I launch my game, but no one uses it. And so my focus has always been on utility and less on the pure speculation part of it for making money. But I do understand in crypto, if you took out the money-making part of it, I suspect it would be invisible. Like there would be a few random people playing around with it like there are in different corners of the open source space with cool tech, but no one would really care.
Yeah, it's unfortunate. And a lot of people have observed it in many comments. They've seen it across the show that there is sort of an inverse weird relationship. And often
Yes.
the people who we started at the show today talking about Zebec, everybody on TikTok right now is talking about Zebec. And Alex and I, and now, you know, Will, that he's here, we've always been saying like, okay, but why does this thing need a crypto token?
Yes.
Aside from now people can speculate on it. I mean, I think, what is it, like Cardano maybe? One of the top 10 coins is a threshold that the market cap is as large as like Nike or Starbucks or something like that. And I'm like, who uses this stuff? I always say
Right.
it's proof in the pudding.
And
I look for
Cardano-
like a company that people use, and then I would buy it. You know, I
Right.
don't know.
Cardano, like I remember when that was always the question, what is it used for?
What are they doing?
And then in 2021, they started saying, oh, it's going to be a NFT focus chain. And I
Yeah,
was
they
like,
started
really?
pivoting like everyone. They had a
Like,
killer
really?
metaverse play for a minute that honestly was the best like metaverse where, you know, you like went to a little digital room that I had seen anybody on chain do. And I was like, oh, we're going to do this. I think we're not going to bank the unbanked. We're not going to build infrastructure for, okay.
Right.
It's a metaverse, I guess.
It's probably better for the late night session, but what I could tell you is like,
No, tell me.
yeah, William's real thoughts about like, you know, crypto. And so what, yeah, most of what crypto is about is speculation, of course. You look at the most profitable companies in crypto, they center around trading, right? The exchanges as a category are the most profitable businesses in crypto, right? One just got admitted to the S&P 500. And then stablecoins. Well, stablecoins are necessary for trading. Look at the volume of Tether's trading. Tether, for many years now, has been the most traded crypto on earth. $30 to $40 trillion annually. And the reason for that is 70% of all cryptos traded on exchanges globally settle against Tether.
Yeah.
All crypto settles against Tether. Back in the day, this would probably surprise people who have only been in this business for 4 or 5 years. Back in the day, the top trading pairs were a token against Bitcoin. Second was the token against Ethereum. But of course, the smart thing to do, and one of the reasons we did Tether, was you should always settle against a stable coin so you can calculate your profit. So, but you know, so Tether exists to facilitate trading, and the exchanges exist to facilitate trading. Who actually uses the chains? Whenever I talk to investors who are investing in the space, I ask them this question, like, do you think utility matters? Of course, they all reflexively say yes. And I say, well, would use be the amount of times something is used be an indication of utility? Absolutely. Give me the top 5 used chains. And most of them couldn't name one. Now, because Solana is in that bucket, they can say it, but they would rarely ever mention WAX, and WAX was usually number 1 because it was used for people who weren't speculating. They were just using it as the utility. Yeah. And rather than fight it, I think we just have to say, look, there's cryptos that people just speculate in, like the Trump token, and then there's cryptos that people are going to use to build things, to build businesses. And that's more interesting to me than the speculation part of it.
Yeah.
You know?
Yeah, me too. Okay, let's do this. You got a couple more minutes that I can just get you after the show and we can do a quick follow-up? Because if so, I'd like to tell people where they can find you. I'd like to say goodbye to them for now and then ride our dogs and ponies off into the sunset.
Yeah, let's do it.
Okay, then ladies and gentlemen, monsters and machines, people and creatures of all ages, it's about that time that we're going to ride our dogs and ponies into the sunset. So give us a final thought, a last minute question, suggestion, good joke, word of wisdom. If you've got a complaint, send it somewhere else. I've been talking to my friend, Mr. William Quigley. You can find him on X at William E. Quigley, spelled just like it sounds, or get it from the show notes in the description. And then check out what he's working on over at Wax. Wax.io is the site you want to go to, or you can find them also on X, Wax, WAX _IO. And when you get to William's Twitter, you're going to know it because he's got the laser eyes. I'm going to share them on the screen so everybody can see it. But we'll definitely have him back sometime in the not too distant future. Maybe after dark to talk off the record and let our hair down a bit. But William, I'd love to know before we end the live stream, if you have a final thought for the audience or a final ask, anything that they can do to support you or that you'd like them to remember and do for homework until next time.
I would like to ask them a question. What happened to the post-halving bull market?
Oh man, you're just gonna come right out and ask the difficult questions, huh? Ooh, man, I think some people are probably still waiting for it. What do you think happened? Were you ever expecting that was gonna hit?
100%. Yeah, 100%. I was, and I heard all the arguments. Well, given the increased market capitalization of crypto, it's going to take a lot more maybe fiat-based investing to drive the price up. I heard all the arguments. I guess it was a mixture of hope as well as history that it should happen. Then we hit $100,000 in December 2024, and we had two other signals that indicated post the halving in April 2024. Two signals, one in August and September, which was a very sharp drop and then a pop back, which was indicative of the post-halving trend from the past. And then we hit 100,000, and I thought, okay, we are primed for 2025 being a really great run for Bitcoin. And I thought if by the end of April, Bitcoin wasn't close to $200,000, we would be off the historical pattern. I believe we're off the historical pattern. I see all the, it's really about liquidity and money supply and blah, blah, blah. But those are narratives and those are theories. But one thing I believe we can say we are off the historical pattern now. So we don't know. And remember, historically, 18 months post-halving, which if it happened in April 2024 would be like November 2025. That's when we would get the reversal and we would do 70% pullback in the price of Bitcoin, 95% pullback in the alts. I hope we don't have skipped the Bitcoin bull run, but get the drop, right? We're just in uncharted territory. So yeah. I don't know what's going to happen. But
you don't have a crystal ball, William? Come on, man.
Yeah. I believe if we don't get to 300,000 Bitcoin this run, I can give you a lot of reasons why, like the Bitcoin sort of reliability and why you would want to own it versus, let's say, stocks. You could argue, well, maybe Bitcoin it doesn't have the same historical justification, because if you're going to own something that has huge volatility, it has to come with great upside.
Yeah. It's interesting. So I've got the 8-ball here, and it says Bitcoin fixes this, but I guess we'll just have to wait and see.
Excellent.
Okay, ladies and gentlemen, thank you for all the kind words. Everybody has loved you as a guest, William. They say he rocks. My brain is swimming. I'm going to have to journal about this. Waz says, in answer to your question, when infrastructure is well established, Web3 projects and blockchains, they will be unrecognizable. Everybody says, what knowledge? Thank you for being here. And I would echo what they said. We really appreciate having you. And all of you, thank you for trusting us with your time, your attention, your most valuable assets. You truly are the best part of our show. So before you get out of here, make sure you get William's links from the description. Make sure you find us at theriseupmorningshow.com and then come back, join us same time, same place tomorrow. We will be live right here, and we look forward to seeing you then. Until then, my friends, everybody, stay safe,